Hello, this is Alan Heffling from Comstock Investments. It's Thursday afternoon, October 12th. We had a grain stocks report today, or actually not a grain stocks, but a supply and demand and production report started today. And I just want to go over a few things with you. Let's share this. Okay. I gotta find where I'm at here. Okay, there we go. Starting off today, the production numbers for this year, as you can see, I'm going to point it with my pointer here. The USDA raised the corn production number from last month by just shy of 100 million bushels. They estimated 14.1. We come in at 14.28. So a little bit higher. The yield, they just about increased 2 bushels there. So total production was 14.2. I'll show you the supply and demand table, where all them numbers came from. The soybeans, they kept production the same but lower the yield. And there too, I'll explain why them numbers are where they're at. USDA grain ending stocks. This is for U.S. They raised ending stocks from last month a little bit. 5 million bushels is all, which is not a big thing here. Soybeans, they actually lowered it 45 million bushels. In wheat, which is kind of a sour note here, they raised it 27 million metric ton, or million bushels, I should say, and quite a bit above the average trade guess. All right, we'll go to the next slide. World ending stocks. This is where some of the good news came for in the corn and slash beans. They did lower the world ending stocks on corn from the previous month by 1.5 metric ton. 1.5 million metric ton, I should say. Soybeans, they lowered it a little over 1.4 million metric ton. And wheat, here again, the sour note above the trade estimate and 5 million metric ton more than last month. All right, this is the world ending stocks. This was last year. So you start out with, take these numbers here, bring into the start of last year, and you can see that the world ending soybeans, they grew from last year, but last month they shrank some, and the market picked that up too. Corn, the same thing. Like I said, we dropped quite a bit from last year, as you can see that, and we also dropped for last month. So we're starting to get a trend here a little bit that we're dropping world ending stocks, which is somewhat good news for the corn. Now the wheat, on the other hand, this is I was kind of surprised on the wheat carryover. Disappointing to say the least. And then China here gives 2 numbers here, and you can see China is starting to move their stocks of corn, and that's good news longer term for the corn market. But short term, we got to work through some things yet too. But here on the wheat, China's increased their wheat carryover by quite a bit. So, all right, here's the supply and demand table for the corn. And like I said, they raised the yield just about 2 bushels, but yet they only raised production a little over a million metric ton, a little less than a million metric ton. But we brought in a carryover, beginning stocks. If you remember on the quarterly grain stocks report, we start with a 2.29. Excuse me, we start with a 2.35 ending stocks, and it looks like we're going to for beginning stock, and they raised the beginning or lowered the beginning stocks because of the September report that we had. Production, or again, we increased 96 million bushels. Imports stayed the same. Feed and residue, they increased it 40 million, or actually, yeah, you increased it. So just go on down the line here. You can see ending stocks only rises by 5 million bushels, which isn't too bad of a situation there for the corn. And so constructive, but yet still burdensome, you know, and in the corn market, if you know, kind of reflected that today. Soybean revision, this is where it's a little interested. You can see harvested acres, 800,000 more acres of beans, but they lowered the yield. They lowered the yield 0.4 of a bushel, which kept the production right here, the production the same, 4.431 billion bushels. And basically the supply table on the beans basically comes from the ending stocks from last year. You remember on September stocks report, they lost 45 million. That's basically what we shrank the next year's carryover in beans. And that's somewhat constructive. But we still got a burden supply of beans of 430 million bushels. All right, the wheat. They did play around with the planted acres. They increased it. Harvested acres, they decreased. So net acres harvested, they actually, you know, were less than last month. Bushels, and this is the thing that made me surprised to trade a little bit. They raised the bushels 0.7 of a bushel, and that made our carryover just grow a little bit more. And that's kind of burdensome. I'm kind of concerned about the wheat situation, but we'll just have to see how we play out here. I'm going to go into my charts. This is a November daily bean chart, and this looks quite impressive to me. And my bullish beans right now, not necessarily bullish beans, but if you can see this channel, I'm going to show it with my arrow here. You got an upline channel here, and we got a lower channel here. And this is about a 40-cent range. And it started basically in August 16th, that low right there. And what was impressive about today, we actually went damn near the whole channel. We traded damn near the whole channel, which is a 38, 40-cent range. And we're poking our head above some previous highs, which is constructive. We went through a downtrend line that took us off our June and July highs. We went through that today. So is this a one-day wonder? I don't think it is, but you got to respect this channel that we're in. Every day the price increases about a penny, penny and a half in this channel. But if we can break above it, believe it or not, there isn't much resistance until we get to about the 10.25, to 1040 area, and then obviously our summer high. I don't think we can do that this year. I don't think we can take out our summer's high. The bean number, yeah, remember, they kept the production the same. We're going to have a 430 million bushel carryover. But I like trading this channel. And I guess what I would do if you were selling corn or selling beans out of the field, I would try to buy some calls on a setback. Buying calls or buying futures on a setback. Because I think this channel is going to stay alive and well for some time to come. We're one crop failure. I wouldn't say failure, but if South America has a problem with their crop, where they cut production by 10 or 15%, you'll see these beans trade back above probably $11, possibly $12. So what we're recommending in the beans, selling cash beans, and I know the last 2 years, a lot of producers have been sold cash off the combine because it was profitable, and it still is profitable right now. But the last 2 years, they've been wrong selling beans off the combine. And this year, I think they'd be wrong again, because I think we're one crop away, a crop problem, either in South America or U.S., of moving back to $11 or $12. So on any pullback here, if you have to sell grain out of the field, especially soybeans, I'd be looking at putting the futures position on or bull call spread on. So, but I like this. I like the way we traded today. I like the way we closed. I hope we can follow through tomorrow to the upside, but the report was friendly enough, but yet not bullish enough to maybe make the next extension for right now. So for right now, I think we're going to be in a 40-cent channel. As long as we can make higher highs and higher lows as we go up here, I think it's a good-looking chart on soybeans. Very good. This is a continuation soybean chart. Now, this is a weekly chart. This blue trend line here is from I think, the 2012 high to this low here. It's a downtrending trend line. And you can see the monthly chart. We're in a channel in the monthly chart also. That channel is probably $1 or better or so. But maybe not quite $1. But anyway, we got a monthly channel too. And if we can close above this downtrend line on a monthly chart, that is going to look fairly constructive. You know, this is what makes me think that the beans have put their low in. They put it in August, right here, I think was our August. Let's see, right here was our August low. So once again, I think beans, you own beans through the winter. If you have to, you sell cash corn to cash flow. But some people, I know, situations are different. And I know you may have to sell beans, but I would really recommend buying some calls if that happened. All right, this is a daily corn chart, December corn. I'm going to show you something with today's action. We had a pretty good range in corn today, damn near a 10-cent range, 42.5, a new contract low, and I believe we topped out at 54. So I think we had about a 10 or 12 cent range today. What was nice about today, you can't really see it in this chart, but you know, a key reversal is when you make new contract lows, which we did. You trade above yesterday's high, which we did, but you got to close above yesterday's high. Well, guess what? We closed right at yesterday's high. So technically speaking, we did not have a key reversal, but we come darn close to it. Another thing, now let's look at this pennant formation. The pennant formation, this is that line trend here, and here on the bottom, it's a pennant, okay? And we did trade through the pennant a little bit yesterday. Well, actually, we traded through the pennant up here, but we couldn't maintain it. We traded through it and closed below it yesterday. And today we traded well below yesterday's low, but we couldn't have 2 days in a row below it. So to me, we're still inside this pennant formation, and we're getting very, very close of going one way or the other. Now, just trading sideways would take us out, and then we'd have to make a new pennant. But the rule of thumb is, if we break to the upside or a downside, the apex, which is over here, you know, depends if you draw it here to here, whatever price difference that is, it's like about 25, 30 cents, you can expect to make a move of that magnitude, either up or down. Now, I don't know why we would go up 30 cents December corn, but funnier things have happened. But I don't look for that type of move in corn. I honestly believe we're going to trade sideways from here until probably March. And I'll show the next chart there a little bit better. But that's a daily corn chart. Now, this is a monthly corn chart, continuation chart. And this is why I think, oops, I got to go back one. Excuse me. Let's see. Yeah, here it is, the monthly corn chart. We're in a channel. You can see the channel here. Our summer high a year ago was 437. We actually, in 2015, 437. So that's the top side of the channel. Bottom side of the channel is right around that $3 area. 302, I believe, or 301 was the low last year. So far, this year's low, I believe, has been 328, I believe. That would be next support in December corn if December corn happens to falter here. But anyway, I see us trading in this channel, this $1.37 channel, for, I'm going to guess, at least through next March, possibly next April timeframe. They're talking about bigger corn acres next year. We don't need any more corn acres, but that's what the talk is. I just don't see a lot of good things about the corn market right now. I would try to buy on dips, buy calls on dips, which we have. And I'd actually like to get some puts sold too. But anyway, we need to close above this downtrend line. And it looks like that's sitting on a monthly chart around 370 area. I don't exactly know where it's at, but I'm guessing around 370. It'd be nice if we could do that, but I don't see it happening near term. All right, the next chart, I believe, is a wheat chart. This is a daily wheat chart, and to me, we're breaking down, and we're breaking down to where I'm a little concerned about it. This is the low that we put in back in August. I believe it's 322.5. The high that we put in here in September was 402 area, 403 area. And it looks like that could be the range that we go in, the wheat market. I'm concerned about it. We closed at 430.5 today. And we did come out with a record tonight to possibly buy some wheat below 430. Then I would use a sell stop below this low here, which is 422. I'd probably give it 15 cents. But I don't like the way the wheat's trading. I think we're going to try to challenge this low here. I don't know if we can trade through it, but I am willing to bet with a trade to buy it here, and hopefully we can bounce off that. Okay, now this, I always have a chart that doesn't really pertain to grain markets. This is the S&P chart. Or excuse me, this is a monthly monthly continuation wheat chart. You know that if you look at December, it's in a downdraft, December daily downdraft. It doesn't look very good. But if I bring up a continuation wheat chart, it looks somewhat constructive. You know, we put the low in last year. I think it was like 354 area. And then this spring, we put in a low of right around $4. Actually, this summer, I think it was May or June. Let's see. This is October, August. We put the low in. And so far, we got an inside month going. We haven't taken out last month's low. We haven't taken out last month's high. So the monthly continuation wheat chart looks a lot better than daily chart. And hopefully these trend lines will hold down here. This is probably right around 405, 410 area. So that's another reason why I wouldn't be afraid to maybe buy some December wheat here below 430. All right, here's my S&P E-mini chart. Last month, I featured this chart too. Last month, we were trading, let's see, that was the 12th. We were trading about right here, 2,500 is about where we were trading last month. You can see in a month's time, we've rallied 50 points in the S&P. And if you see this blue line and this blue line, this is a channel that we've been in for a year. It's roughly about a 100-point channel, 90-point channel. And we poked ourselves above that channel last week. And right now, that channel is support to the downtrend. Now, if we fall back into this channel, you could see a 100-point sell-off in the S&P. That would not break the market. It would be healthy to the market if we could break that much and correct itself, because we are extremely overbought in the S&P. So I guess I would not be afraid to short the S&P somewhere above 2550. I'd probably give it, you know, 10 points, 20 points. Every point is $50. So, but anyway, I'm looking for a correction to come. But I think a lot of guys have been doing that and going short and getting burnt. But every day we get closer to that. But you could either buy it. You could either buy a. Whoops, I got to go back. There we are. We could either go back and do a bear put spread where you buy a 25.50 put and sell a 24.50 put. You know, try to do it for 20 points. $1,000 is all you risk. $1,000 to make 5,000. That's not a bad thing. You have until December 15th for that to work. So, what chart is this? Oh, that's the continuation S&P chart. I did not update that because we're way above 24.92. So just not pay attention to that. So once again, I'm Alan Helfing from Comstock Investments. That's the review on today's grain report. Positive close for the beans, constructive close for the corn, and somewhat a weak close on the wheat market. But anyway, I appreciate you taking time watching this seminar or webinar, I guess it is. If for some reason you need to talk to me, please call us at our 1-800 number. If you see the number here, the 933-9400, that number is going to go away here in a couple of weeks because we are changing phone systems and we'll be using the 800 number. So just a reminder that the 800 number is still does work. So, but anyway, I hope that you guys are out in the field. I know we're falling behind on the harvest, but anyway, safe harvest, and we'll see you next time. Thank you.